Welcome back to the channel. So question number 246 we have covered yesterday of stock turnover ratio, that is average stock over COGS. So how do we calculate the average stock? Opening stock plus closing stock divided by 2, that is the average stock, that is 55,000. COGS was given to us 2,20,000, so 55,000 divided by 2,20,000 is equal to 4 times. Then next we have with us is cash from operations. It was given, net profit was given to us 2 lakh rupees. Increase in assets was given 10,000. So when we deducted it, we got cash from operations 1,90,000. So next we calculate question number 246. Question number 246, that is heavy initial advertisement expenditure is in introducing a new machinery. Heavy advertisement expenditure in introducing new machinery what it is called as, it is called as deferred revenue expenditure. Next we have, after heavy advertisement expenditure which is used to introduce a new machinery, next we have with us is the contingent liability. How is contingent liability covered? That is convention of disclosure. Contingent liability is covered in convention of disclosure. This is contingent liability. Then next is, after contingent liability we have one accounting equation, that is equals to liabilities is equals to capital minus assets, that is equal to the liabilities. Next we have cash book is an example of special general. So go through these 2 or 3 questions, then we will cover the next question. Like purchase account is a which account? Purchase account is a real account. Purchase account is which account? Purchase account is a real account. Next question, subsidiary books can be divided into how many types? So, subsidiary books, how many types? 8 types. The types of subsidiary books is equals to 8. Return outward, book makes a record of goods returned to the supplier. What is return inward and what is return outward? Question number 250 is, question number 250. Return inward and return outward. So return inward is called as sales return. Return outward is called as purchase return. And purchase return are always credited, sales return are always debited. This is one thing. Next we have the use of budget to control firms' activities is called as. The use of budget to control firms' activities. It is called as budgetary control. Use of budget to control firms' activities is called as budgetary control. So this is one important question. Then after this we have with us that is contribution. So what is contribution? At the break-even point, contribution will equal to at the break-even point, contribution is equals to at the break-even point contribution equals to fixed cost. Next we have the technique of marginal costing is based on classification of cost into. So marginal costing technique is there. It classifies cost into two types, that is the fixed cost and variable cost. So this is the type of marginal costing. After marginal costing we have with us single unit. When there is sale of single unit, it is called as marginal costing. Then after marginal costing we have the other important question, that is equals to marginal costing is equals to total cost. MC is equals to total cost minus fixed cost, or it is the sum total of TVC, total variable cost. Next we have orthodox break even. Orthodox break even is called what? Orthodox break even is called the traditional break even point. Orthodox break even is called the traditional break even point. So there is a type of chart which is prepared to show after orthodox break even. Just go through these questions, then we will come to question number 257. Then we will come to question number 257. So we have question number 257 with us. There is a way in which there is comparison between standard and actual cost in budget. So which is that budget called? That is called as cost control budget. That is called as cost control budget or control break even chart. And presently what we call it, control break even chart. Control break even chart is also called as the cost. It is also called where there is comparison between the standard and the actual cost of budget. That is also called as a control break even chart. It is prepared to know what are the deviations or what are the changes. Then next we have decision always involves prediction. Costs which are pertinent for decision making are termed as relevant cost. This everyone knows. Next question we have, the Z-score approach to ratio analysis was developed by whom? The Z-score approach of ratio analysis was developed by Altman. Altman has evolved this Z-score approach. Then next we have with us is the basic function of management accounting is to assist the management in performing its functions effectively. When journal entries have more than one debit and more than one credit, it is called as compound journal entry. So what is a compound journal entry? Compound journal entry more than one debit and credit. It is called as compound journal entry. Next we have accounting designed for use in the operational needs of the business. Which is used in the operational needs of business, it is called as management accounting. Which is designed to serve the parties external to the operational responsibility, it is called as financial accounting. Then next we have transport charges and all, they are included in the installation charges. So till here it is clear, comparison between standard and actual cost is control break-even chart, Z-score approach was given by Altman, compound journal entry, more than one account is there. This is very much clear. Question number 260. Question number 260, which deals question number 260, which deals with transportation charges, charges of electrification, charges of electricity and all are called as installation charges. This is very much clear. It is called as installation charges. Then next we have with us is opportunity cost. What does opportunity cost helps in? Opportunity cost is also called as the cost of next best alternative foregone, and opportunity cost helps in taking decision. Opportunity cost helps in taking the decisions. After opportunity cost, next thing we have with us is conversion cost. What is conversion cost? Conversion cost is the sum of direct cost, direct wages, and direct overheads, and the factory overheads. So it is the part of conversion cost. Next we have with us, that is, which is not recorded in cash book. Credit purchase of goods in transit. Credit purchase is not recorded. Credit purchase is not recorded in cash book because all those credit transactions will not be recorded in the cash book. Next question. Now there are balances of trading account and P&L account. Question number 264. Question number 264. This is the trading account. On one side there is debit, on other side there is credit. So first is buy sales. Suppose the amount is 2 lakh. Then there are two wages, 50,000, two purchases, 1 lakh. Two purchases is how much? 1 lakh. So this is the amount of 2 lakh. This is the amount of purchases. So how you will record? So now there is 2 net loss, 2 gross loss. That is how much? 50,000. Next we have by gross loss brought down is equals to 50,000. So this is the easiest calculation we have done to show that gross loss has which balance? Gross loss, balance of trading account debit side shows what? So debit side shows what? Gross profit, and credit side shows the gross loss. Debit side shows the gross profit and the credit side shows the gross loss. So there is an error in this question which I have committed. This is not gross profit. This is GP, gross profit. How you will come to know? Because sales is greater than the expenses, or the revenue is greater than expenses, so there is gross profit which has a debit balance. So the trading account with the debit balance shows the gross profit. This is clear? Then next we have balance of the profit and loss account on the debit side. Obviously, it is going to be the net profit. Manufacturing account shows what? Manufacturing account shows manufacturing account shows the cost of production. Manufacturing account shows the cost of production. Next we have salaries and wages. They are shown on the debit side of profit and loss account, and wages and salary. So one important question, question number 266. We have the next question with us. That is question number 266. If it is written wages and salaries, then they are on the debit side, but which account? Trading account. And if it is written salaries and wages, then it is on debit side of P&L account. So this is very much clear. Next important thing, there is a difference between two. Just go through these two differences. Wages and salaries and wages. There is a difference in the form of accounts. Next question, question number 267. Which of the following which is a fictitious asset? So the answer is copyrights. Copyrights are the fictitious asset. Next question. Balance sheet of a business as at a specific movement shows the balance sheet at specific movement shows the dash. It shows the financial position. Balance sheet at specific movement shows the financial position. Next we have, in case of dissolution of the firm, what is the effect of bank overdraft? In case of dissolution of a firm, question number 269. In case of dissolution of a firm, in case of dissolution of firm, in case of dissolution of the firm, what is the effect of bank overdraft? What is the effect of bank overdraft? The answer is transfer to transferred to revaluation account. Next question, question number 270. What is the equation of balance sheet? Asset is equals to capital plus liabilities. Next question, question number 271. Question number 271. Document on which the entry is passed in journal. It is called a voucher. So voucher is the way on which the entry is passed in journal. It is called as a voucher. Next we have bank balance as per cash book. Bank balance as per cash book is the certain amount of money. Balance as per cash book is rupees 18,500. Question number 272. Question number 272. Balance as per cash book is how much? 18,500. And next we have rupees 4,500 paid into bank. So you have to calculate the amount. You have to calculate the passbook balance. So passbook balance is going to how much? 14,000. Passbook balance will be how much? 14,000. This is very much clear. Next we have passbook balance is 20,000. Dividend of 1,000 collected. So first of all, you should know one thing related to BRS, that is bank reconciliation statement. When we are talking about BRS is prepared in order to know the financial position of a concern, so that there is match between both the cash and the bank account. That is the way why we prepare the BRS. So if there is more withdrawal than the deposits, then it is called a debit balance or the overdraft. So there are certain transactions related to the bank reconciliation statement. First of all, when we are talking about bank reconciliation statement, there are certain additions which we need to do or which we need to know in order to do the entries. First is balance as per cash book. First it is balance as per cash book, checks issued but not presented, and add interest credited by bank. These all things will be added. Then we will minus checks deposited but not credited, bank charges not recorded in cash book, and balance as per passbook. So first is there balance as per cash book, then add interest, checks issued but not presented, checks issued but not presented, and what we will add, interest credited by bank, and next will be interest credited by bank. These are one thing. Then these all things will come on the debit side, and these things will come on credit side. One will have a debit balance, other will have a credit balance. Balance as per cash book, add checks issued but not presented, add interest credited by bank. Then what we will less? Checks deposited but not credited, bank charges not recorded in cash book. Less checks deposited but not credited, less checks deposited but not credited. One thing is this, checks deposited but not credited, and next is bank charges not recorded in cash book. Bank charges not recorded in cash book in CB, that also we will minus. So that will come on the credit side. And the debit and the credit balance should match. Next question we have. Next question is related to overdraft bank balance as shown by cash book is rupees 6,000. A check of rupees 10,400 was deposited to bank but omitted in the cash book. In the passbook, the amount is wrongly entered in the withdrawal column. Overdraft balance as per passbook. So overdraft bank balance as shown by cash book is 6,000. Check was deposited 10,400. So what we will do in question number 274, just go through these. These are both important and a bit technical questions. Question number 274. Question number 274. It is given bank balance as per passbook a certain amount and add after bank balance as per passbook what we need to do. Bank balance as per passbook and a deposit of a check, add check deposited. So the amount is 6,000 over here, 10,400 over here. So the total amount is 16,400. This is one thing we need to know. Next is bank balance as per passbook. Bank balance as per passbook is 30,000. Dividend collected is 1,000 but entered in cash book as 100. So this is very easy. This is all BRS questions we are doing. So bank balance is given. Bank balance is 30,000 less. So what we will do? Less dividend payment. So here you should know one thing very important, that when we are doing bank balance as per passbook 30,000 is there, then there is dividend of 1,000 and there is the amount but entered in cash book as 100. So you should understand the question. Dividend, what we need to do, the dividend payments we need to now only I am told dividend payments will be added. So dividend payment was 1,000. But that was incorrect. So we will minus it. That is why I have written minus. That is 29,000. Then we will add the dividend payment, which is actual. Actual dividend payment will be added. That is rupees 100. So the balance as per cash book is equals to 29,100. It is correct. Next question we have overdraft as per cash book. Overdraft. Question number 276. Question number 276. We have a question of overdraft, and that is very important. Overdraft as per cash book. Checks issued but not presented in balance as per passbook will be. So this is very easy question. Overdraft as per cash book. It will have which balance? It will have debit balance. Amount is 1,000. Right? Now we will talk about the credit balance. So debit balance is how much? 1,000. So now calculate checks issued but not presented. How much? 1,000, because we need to match the balance. So the credit balance is also 1,000. Clear? Next question we have passbook overdraft balance 30,000. These are all very important questions. These are all related to bank reconciliation statement. These all the questions are related to bank reconciliation statement. After this, we have the next question. Question number 277. Question number 277. Question number 277 is related to again bank reconciliation statement. That is given passbook overdraft balance 30,000. Passbook overdraft balance. So one is the debit side, other is the credit side. Passbook overdraft balance is 30,000. This thing is clear. Then next we have checks deposited but not credited. So we will add, we know, add checks deposited but not credited. That amount is how much? That amount is rupees 8,000. So what we will do? Balance as per passbook 38,000. Next question. Bank balance as per cash book is rupees 570. Next question. Bank balance. Question number 278. Bank balance as per passbook. This is one thing we need to know. Bank balance as per passbook is how much? Rupees 570. So that is on the debit side. Then what has happened? There is a question in which they have done the debit side of the cash book bank column is over added to the extent of 9500. So if debit side is overextended, how will we will have an ill effect? Debit side overextended. Debit side is overextended by how much? 9,000. So it will be on credit side. 9,000 will be here. So which is the balance and what is the amount we are getting? We are getting the amount overdraft balance as per passbook. So when I say credit is more than debit, then there is overdraft. So this is the overdraft balance. How much? We will do the calculation. 9,000 minus 570. 8,330. 8,330. 8,330 is the overdraft balance. This is very much clear. Now what we will do to summarize bank reconciliation statement, we will summarize the BRS, that is bank reconciliation statement, and we will write down I will summarize the bank reconciliation statement. So one thing we have, now there is summary in question number 279. That is very important, question number 279. Question number 279. Take a 1 minute, breathe and focus on bank reconciliation statement, the final statement, and how the difference is there and what are the situations of debit and credit and how we need to prepare. First there is particulars, then there is debit, and then there is credit. This is very much clear. On one side there is debit, on other side there is credit. That is very much important. Then next we have in bank reconciliation, we need to know two things. One is the debit balance, other is the credit balance. First of all, we will have a balance as per cash book, and then at last we will have balance as per passbook. And one important thing, When withdrawal is more than deposits, it is equal to overdraft. If there is debit balance, there is overdraft. If there is debit balance, then there is overdraft. We will write down balance as per cash book, one amount, add balance as per cash book, that is the debit balance. Suppose it is 50,000. Okay, balance as per cash book it is 50,000. Then we will write down checks issued but not presented. Checks issued but not presented. So it will again have a debit balance, that is 5,000. Then next we have, after that, interest credited by bank. Interest credited by bank. That is how much? 10,000. So that is the total amount is 65,000 on the debit side. Then we will less from all of these other amounts, that is checks deposited but not credited, checks deposited but not credited, one amount, that is rupees 40,000, checks deposited but not credited, and then is bank charges not recorded in cash book. Bank charges not recorded in cash book. That is again the amount of 15 of 25,000. So two accounts balance equally 65,000 and 65,000. Both the sides are there of 65,000, but the question arises of the overdraft. So in case this 5,000 we remove, then it becomes the case of overdraft. We will write down overdraft balance as per passbook rupees how much? 60,000 rupees 5,000. So that is the overdraft balance. So this is all about bank reconciliation statement and the MCQs related to bank reconciliation statement which are asked in exam. Simply any charges are there, they will be credited because they are not the income. In BRS, the rule of debit all incomes and expenses and debit all losses and expenses, credit all income and gains. We will just inverse that principle. That is, we will credit all losses and expenses and debit all incomes and gains. That is it. That is the basic rule of bank reconciliation statement. So this is clear to all. That is the bank reconciliation statement. So who sends the debit note? Debit note is sent by the creditor. At the time of rental of a bill, interest account as in the books of the drawer is credited. When the drawee becomes insolvent, the bill accepted by him is treated as dishonored. So this is very much important bank reconciliation statement. Tomorrow we will continue from question number 280th. So please do share and subscribe to my channel for more video updates.